Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day, try to learn something from it, and then plan for a better trade for the next day. So this is the analysis for Jan 6 Friday tomorrow, 2023. And bears had tightened the grip today. It was a bearish day today. Market slips. Institutions are selling big, and it makes us to worry if more is ahead or not. Let's try to find the answer from the charts. Let's get the charts of Nifty. Remove all the indicators and all other things and see the plain charts. This is what happened today. It's a bearish candle. It's a hammer, not exactly hammer. The head will be small, it's big, but reversal is needed by the wick size. Smaller reversal happened. It bounced up from a moving average zones. So bearish candle continuation. So it's big fall in the last 2 days. All right, Banknifty also big fall. That's 3% fall in just 2 days, 1,270 points. Right, this is also nearly 2% in 2 days. Right, so big falls on both indices, bearishness, reversals, and let's quickly see the weekly. So weekly we had been talking about resistance, which was taken away in October 31st, and then it bounced up. On multiple weeks it has made all-time high as well on both indices, and then reversed completely and then bounced up in a change in polarity, and then the following week, that is this week, it could not sustain that. It is unable to move above the bounce up candle. Right, so that's what is happening here. Also there is a cup and handle or a rounding pattern or a previous trend resistance was broken out, and multiple all-time highs were created, and then we completely reversed and almost following into the resistance trend line, and then bounced up, and then following week it can sustain that. That's what is happening in the Banknifty. Right, we are more interested on daily, so let's look in that. So this is what there is a descending wedge line, and it got hit with resistance at 18,250 zones, and then reversed, and then continues to reverse that, and it looks like it may be heading further down. Same with Banknifty, we have a descending wedge, hit the resistance near to the 43,500 zones and could not sustain. Then big reversal because 3% cut, and Nifty had 2% cut only. So that's what we are. So it looks like we may be retesting this zone and then probably further slip to the 61 retracement levels as well. That's possible. Nifty also, it could slip down further to the 61 kind of levels. It could be a 17,600 sign after retesting. So the retest will be successful or not, we'll come to know if the bounce up happens from here or not. That's where we are. Let's go to the numbers. What we gain, what we lose. 51 points only lost today after the reversal after 1:30 in the expiry day today, weekly. And it formed a bearish candle basically, somewhat like a hammer. Banknifty was somewhat like a hammer, but the loss, look at this, 350 points lost. So Banknifty is losing bigger cut is happening in the banks. 8-1 lost here, while Nifty is losing less. Right, because Banknifty had made multiple all-time highs and then ran up much more than the Nifty in a sense. Intraday, the price action is mostly falling down, but after 1:30 we had an attempt to move, that is 0.60, that is weak actually, but it gained 300 points, 100 points respectively in the next Banknifty. So all the DMA is lost. So the 100 DMA bounce is what is on the Nifty, and the 50 DMA bounce is what is on the Banknifty. Look at this, 100 DMA bounce, and Nifty daily you have a 50 DMA bounce. So moving average support is working beautifully, and that bounce number sustain or not, we'll come to know if the price is moving or below the previous today's candle is low. Then we are heading towards the retest of that level of 17,774 levels, and then if that is also not holding, then we go down to 7,600, 61. So there is a descending wedge. We are seeing that there is a lower high, lower low pattern that is forming, and that is why within the descending wedge the lower high, lower lower pattern is forming, and then that will be negated only if it moves over the 18,450. Otherwise, it will continue to be forming new lower lows and lower highs. Right? Changing polarity bounce, you can say it's work in progress until the weekends tomorrow. So otherwise, it's last month the price of the second week of the bounce does not sustain the high of the previous week, then this CIP bounce will get negated. Right, so that's what we are. So bearishness in the price action, and then support levels 18,262 swing high, 18,442, 18,400. These are all the levels of resistance upside. 18,400, 442 is Fibonacci, the retracement level as well as lackluster resistance. 17,959 downside support, and 17,959 80 17825 would be support after that's Fibonacci 50 retracement level also. Banknifty is 43 339 would be support, would be the resistance upside, and 43 500 after that is a rounding number as well. Then 43 615 also previous week high can be resistance. Downside 42 500 levels 556 would be support, and then it's Fibonacci 23 retracement also. 42 363 would be support after that if that is the previous swing low. Bollinger Bands are beginning of expansion that's seen, and consolidation is ending and it is expanding downside, which is clearly indicating that there's more downside. The bearish price because it's less than the 20 median. Momentum is sideways and it's falling momentum. So bearishness is indicated in the momentum. And momentum sideways only. It's still not going to the bearishness. I'm sorry to say that, but it's falling. It's falling and almost getting into the bearish zones. Right? It's falling steep, and until it finds a support zone. If it finds a support at the RSI 40, it should be fine. But so sideways momentum and the trend is bearish, and the bearish is increasing. The rising strength of say DX, rising strength in the bearishness. So both indices are bearish now. So momentum bearish and bearish, Bollinger Bands bearish, and price action also bearish. Well, volatility was kind of close with flat, only 1.4% of cool off, but actually it was very volatile. Right? The indicator indicating the volatility itself is volatile. So it's 5% up move in the in the morning, and then 5% down move. So it's totally 10% of move happened in the VIX itself. Although finally it managed to close flattish of 14.98. So it is on the edge of getting into the higher regime, right? On the edge of getting out of the lower regime of VIX is what is happening. There is uncertainty there. The COVID worries are there. Russian war worries are still there. Then in addition to that, you have the recession fears in the US and interest rate hikes and all that is still there. So that's why the VIX is not ready to cool off after it has hit 13. New worries on the COVID also has added up to that. So I have to be cautious on this main introverted nature of the VIX, where it can spike up to 20 in a matter of 1 or 2 days. Stay out of the trade if such situation happens. So I have to be cautious, but especially when you are carrying forward overnight position. So futures OI was a short build up today on both indices for sure, and options OI is for the next weekly Jan 12th weekly expiry. It may not be limits at 11 because trading actively will happen only from tomorrow, but we can make a note of this 18,000, 19,000 where the highest put and call writing is there. 43,000 on Banknifty where the highest put and call writing is seen. 0.70 is closer to the bullishness than the bearishness, but sideways kind of good call ratio is what we're talking about, right? But ignore those until tomorrow we get the figures of the options OI. So overall, there is it does not indicate any way of bullishness. Right? Sectoral index, sectoral watch is interesting today. IT sector alone closed at 0.5. So first of all, did somewhat okay. 1% move was seen in the metal, auto, pharma, and FMCG sectors, while real estate closed flat, but still green. So IT was only sector actually which closed 0.5% down. All sectors now in the sideways, none of them are bearish. Sector-wise, if you say across sectors, selling has not happened today. Now, selling has happened only in the heavyweights. That means institutional selling happened only in the selected heavyweights. So look at this heavyweights how they performed. So across selling did not happen. That is what we have to understand. ICICI Bank fell 2%. That's the largest contributor of today's fall. HDFC also joined the cloud at 0.64% down. Nifty was another one. Following some news of layoffs in Google or something, and some fundamental news came, and then Nifty fell 1.3%, and that is also a big contributor to the index falling. Right, just all others were flat red. No big fall has not happened in the other sectors, but ICICI and HDFC contributed big. 2.2% ICICI Bank leads the fall. Now, all of them are only Kodak. Yeah, so see this. Only Kodak was there till yesterday. Kodak and Nifty. In the bearishness of short-term momentum. Reliance, the giant, and HDFC Bank are the giant in the heavyweight contribution wise. They have joined the momentum bearishness in the short term. So all other sectors are sideways. So this heavyweight, selective selling is what we can understand from this institutional selling. Look at this institutional selling. 1,449 crores of selling has happened today, and there is some mistake. It's 194. 194 selling is what happened today, right? So DI is also selling, FI is also selling basically. So 1400, if you see last 10 days they're selling, and last 2-3 days they're selling heavy. Institutional selling is the reason for today's fall. So no levels matters when they continuously uh, you know keeps on selling, then others will run for cover, and that's what's happening, right? So crude oil is actually falling. It's at 75, but right now it is seeing some rising, some green is seen, but it has fallen down substantially to 75 below levels, which is good. Dollar index is spiking as usual. As of now, it's seen flat, but it is not ready to come down from this 104 kind of level. So 104.47 where it is, and UCNR keeps on rising up. As of now, it's falling and flat, but 82.4 is where it is. It has been there to above the 82 for so many ages. Always sideways overall, but the rupee is not ready to appreciate at all, which is a worry. But crude is okay to have gone to the 75 levels at least. Gold is hedging instrument and it is spiking up. It's in the bullish momentum and it is spiking. Right now it is seen falling today, but yesterday it was spiking and it is having bullish momentum and it has climbed the resistance one and trying to take out the next one and spiking. Gold usually spikes when the market is falling. So that's how it is happening, right? People will take hedge positions, or people will try to put in balance, have a portfolio distributed across multiple asset categories and commodities and all that, right? So Singapore exchange is flat as of now. US index is flat as of now. Dow Jones seeing flat as of now, but try to see all this post market. But US index is in a descending wedge and it's in bearishness. It is reversing from it. Descending wedge top channel. I'm trying to find support. So use all the indices, S&P 500, Nasdaq, Dow Jones are all having a bearish bias. But momentum is managed to hold on to the sideways as of now. Let to keep a close watch if some big falls are happening in the or not. So Fed minutes came in and it was a hawkishness that was read by the market. Market reacted to that. The market was closed and digested. We might have reacted to this today, maybe because of a Fed meeting minutes that came out yesterday. US dog data is coming today, so these kind of things can create some volatility that you can expect if they're reacting big. Reacted with big impact on the US market. First, we'll come to know about that pre-market tomorrow. So if that is the case, then our market is most likely to follow that. Until some other close cues are there. Two stock picks: Power Finance Corporation long and Bajaj short. Bajaj Finance, which is a very good stock. Remember, this is all short calls, just for short swing trades, not for all, ever. Right? So you have to keep tight stop losses. The reason is it has fallen short-term momentum is bearishness. Trend is short-term and medium-term it is climbing up. Means the trend is actually falling, climbing up with strength and then falling in the bearish DMI negative zones. So trend and momentum is bearish on medium-term and short-term. And there is a trend line channel, long trend line channel is no problem. So the candle today is very big. Right. So it's a 477% of what is what happens, right? So the very next day you may not get it, but it may consolidate 1 or 2, and then once this candle's low is breached, then you have to act the entry, and then you can get a swing trade. But put tight stop losses above the candle's high. So that's a short call on Bajaj Finance, and Power Finance is something related to the REC, Power Finance Corporation, another company in that which is shooting up. So this is a range shift in the momentum on the weekly, which is very powerful, and it has actually bounced up today. And last week that range shift was confirmed. Now the missed to see that now it has bounced up. That target is actually met, so I'll be cautious here as well. Entry has been made on the lot. So entry, so this can go up and then you hit the all-time highs once again, but you have to be very careful, and then tight stop losses at the candle low has to be put, and not that candle low, this today's candle's low, right? So this will be the stop loss 151, right? And then trail upwards, right? Portions according to your capacity. It can give long opportunities. Powerful. Something is fundamentally good that people are buying it. Maybe discount or something else. Not discount, dividend or something else, which I'm not aware. We'll have to see. But the charts are showing that there are people buying it. So follow the sharks. Big bangs and volumes are there, and follow it. But have tight stop losses. So long and short calls are there. So just after studying all these different parametrics of technical analysis of the chart, we're just trying to wind up. So Today market got hit by bears once again. Yesterday, second day, 2% and 3% gone in 2 days. So it's bearish all around. So there's a serious doubt whether this weekly bounce that happened last week will sustain or not. That's a question now. If it's not sustaining, then it is negating the resistance breakout, and breakout becomes a fake out. Now, what is seen today is institution selling. Institutions have been selling for 10 days, foreign institutions especially. And today the domestic institutions also were selling. So that they may be knowing more than what we are knowing. So there might be some reason for it. We don't know it yet. So that is worrying. So until they come back to small selling, or at least small buying, or no buying, flat buying. So the big selling is always trouble, especially by the foreign institutions. So 2,000 plus crores of selling happening today. Also 1,500. Yesterday 2,000. Friday 2,000. So side of selling. So it's worrying. They had been selling the entire 2021. Now again they are selling it in 2022. Again they are selling in 2023. Means we have trouble for sure. As the price is less than moving average, Bollinger Bands are expanding downside. Momentum is falling sideways. Bearish trend is there at ADX. Rupees weak. US markets and resistance reversing and bearish in the short term. And all of these are reasons for me to have a short term bearish, mild bearishness. Right? So VIX is spiking up, and 15% spike happened 1 week last time. Yesterday there was a big spike. Today it cooled off little. But intraday VIX movement is a very, very volatile. So you have to be very cautious when you're playing little rates. If the spike is moving above the 20, then stay out of it. I wish to watch now would be 17,500 and 18,500 on the upside and downside and upside on the Nifty, and 41,500 and 43,500 on the upside and on the low side and upside on the Banknifty for the short term. Right, not immediately for tomorrow. Right, tomorrow's level we already seen the levels. Right, what you have to watch out is whether that swing low is getting retested. After that, 761 and upside similarly, 18,000 will be recovered, 18,300, 18,400. We know the levels, we already studied that. So, this was the medium term in general. These are the big levels where we have to change our stance, whether bearish, bullish, that thing. Right? Seriously, we'll have to change if these are breached. Right? If 61 retracement, if it is breached, then it's going to continue for some more time, is what normally it means. Right? So, as I say, protect your long term quality investments, don't get out of them. So they are for multiple years. So market will fall down and correct themselves and then come back. So protect them and get underlying by option strategies. Check out the playlist for the videos of covered calls and cash liquid puts and all the different option strategies to protect your cap, to protect your long-term investment, have rental income from it while markets are correcting. So and always downside when it is crashing, it's an opportunity for you to buy in SIP, not big, right? Further it falls, little more. Further it falls, little more. And only quality stocks, not any any penny stocks. Never. And when you're playing, stay out of the game if it is spiking above the 20 weeks. And if you are playing, then cut short position size if the VIX is spiking up beyond control. And always protect your capital and then hedge it with option strategies and have non-direction with hedge positions. Where the risk is demand and you'll still have something capital left for the next day. Otherwise, one mistake and you're out of the game. So protect the capital, that's the only thing. Risk management is the only thing that you can do, and then study the probabilities where the price can move up or down, where it can face resistance or support. That's the only thing is in our hands. Resistance with the market, it will behave like what it wants. So that's my view, might be resistance for the next day. So I hope this helped you some way in having a better trade plan for the next day. If it helped you in some way in understanding the markets better, then consider hitting the like button and share it to maximum. We have very few subscriptions and appreciate the help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.